Good evening, everybody. Welcome to our YouTube Live. We are sharing one of our classes so you can see what is offered in our 7-part series of Patrick Devine. And starting February 17th, we are going to do a foundations and privacy security series starting February 17th at 5 p.m. Pacific Standard Time, and that will run for 7 weeks. So if you want to participate in the classes, send us an email to classes at privatepathhrsolutions.com, and we will invite you to come and attend the classes while we do the lives. Let's get started. It's 5 o'clock, and today we are going over Series 2 of the Patrick Devine series, and this is Volume 8, From Fiction to Function. Living lawfully in the private while maintaining necessary public contracts. Series 2, The Private Mastery in Application. Operate privately with precision, learn which public contracts may remain open, how to manage them through your trust, and how to retire without re-entering the public. Disclaimer and legal notice. This publication is provided for educational and informational purposes only. It does not constitute legal, tax, financial, or accounting advice, nor should it be relied upon as a substitute for professional counsel. The material presented herein reflects private research, historical references, and educational analysis, including interpretations and expansions of teachings attributed to Patrick Devine, as developed and contextualized by Private Path. Any reference to law, equity, fiduciary practice, trust, or administrative processes are offered solely for study and discussion, not as instruction to engage in any specific legal or financial action. By accessing or using this material, you acknowledge and agree that you are acting in your private capacity, not under public advisement or representation. You assume full responsibility for your own decisions, filings, communications, and actions. No outcomes, remedies, or results are promised or implied. Private Path HR Solutions PMA makes no guarantees, express or implied. For matters involving legal rights, tax obligations, or financial decisions, you are advised to consult with a licensed professional in your jurisdiction who is competent to advise on those matters. Private Membership Association Notice. This ebook is a private member educational resource and the exclusive property of Private Path HR Solutions PMA, a private membership association. Access to and use of the publication is strictly limited to authorized members of the PMA and is governed by the terms, agreements, customs, and protections of private membership law. Use of this material outside the scope of PMA jurisdiction, including but not limited to public distribution, publication, reproduction, or reliance on non-members, is expressly prohibited without prior written authorization. PMA usage, confidentiality, and fee notice. Unauthorized sharing, forwarding, copying, reproduction, or provision of access to this material, whether in whole or in part, to any non-member constitutes a breach of the private membership agreement. Such breach may result in immediate termination of membership, revocation of access to PMA resources, enforcement of applicable private remedies, assessment of contractual fees or damages as outlined in PMA agreements. This resource is issued in confidence for the private education of members only and remains protected under private contract and association law. Enforcement, use restrictions, and administrative remedies. This publication is a private educational resource issued exclusively to authorized members of Private Path HR Solutions PMA. Access to and use of this material is conditional upon continued compliance with the private membership agreement and all applicable PMA rules, policies, and customs. If this material is found in the possession of a non-member, or if unauthorized access, sharing, duplication, or distribution is discovered, the member responsible shall be deemed in material breach of their private membership agreement. Upon such breach, the PMA may impose one or more private administrative remedies, including but not limited to suspension or termination of membership privileges, revocation of access to PMA educational resources and services, assessment of reasonable administrative fees, and pursuit of all available contractual and equitable remedies. All remedies may be applied individually or cumulatively at the sole discretion of the PMA. Recording, capture, and replication prohibition. The use of audio recording, video recording, screen capture, transcription tools, note replication systems, or any other method intended to preserve, reproduce, or redistribute this material outside authorized PMA use is strictly prohibited unless expressly authorized in writing. Any unauthorized recording, capture, or replication constitutes a separate and independent breach, subject to administrative action and enforcement under the private membership agreement. Reservation of rights. Nothing in this notice shall be construed as a waiver or limitation of the PMA's rights to enforce its agreements, protect its intellectual property, or seek appropriate relief through private contractual, equitable, or civil remedies. Acknowledgement of agreement. By accessing, viewing, or using this material, you acknowledge that you have read, understood, and agreed to be bound by these terms as a condition of membership under the protections and jurisdiction of private contract and association law. If you have questions, require guidance, or wish to access additional educational tools, classes, or consulting resources, you can visit our website at www.privatepatHRsolutions.com. Our general email is privatepatHRsolutions@gmail.com. And if you wish to join the classes and have educational support, you can send an email to classes@privatepatHRsolutions.com. If you want to see us on Instagram or TikTok, visit our handle at privatepathhr. Introduction: Bridging the Public and the Private. The deeper one travels into private education, the clearer the question becomes: if I still receive a pension, Social Security, or need a driver's license, have I returned to the public? This single concern has derailed countless sincere students. Some were told they must sever every public tie to be free. Others tied to close accounts prematurely Others tried to close accounts prematurely and found themselves without access to basic services or benefits they had lawfully earned. Volume 8 exists to bring balance back to the conversation. It is not about rejection, it is about reconciliation. It teaches how to function privately, lawfully, and comfortably while keeping certain public contracts open for practical life and retirement without forfeiting your standing or surrendering your estate. Position within the private path curriculum. Series 1, the Patrick Devine Blueprint, laid the groundwork, status correction, estate reclamation, and liquidation of adhesion contracts the Patrick Devine way. Series 2, the Mastery Series, moves from theory to practice, showing step by step how to operate in the private, build PMAs, establish trust-based banking, and expose the myths spread by self-proclaimed gurus. Series 3, Executor Inequity, will come next, where those same structures are administered under the executor's authority. Volume 8 closes Series 2. It is the bridge between learning and living privately, where estate comprehension becomes daily functionality. Why this volume matters. Operating privately is not about erasing the public world. It is about governing it from a higher office. Every trust, PMA, and private EIN exists to hold the fruits of your labor in peace. Yet for many, the most pressing issue is retirement. How do I collect my Social Security? Can I keep Medicare? Can I drive or bank without reattaching to the all caps name? These are not hypotheticals. They are the realities of lawful transition. This volume gives you those answers based on equity, contract law, and practical administration. What to close and why. Some contracts exist purely to bind you to public jurisdiction. You have the voter registration, which places you within the political body of the state. Rescind it once domicile is established privately. The DMV license is a commercial permit. When your trust holds lawful indemnity, the license becomes optional. A business license, in all caps name, should be replaced by the PMA or a trust registrations. Fictitious name filings and similar instruments may be withdrawn once your private entities are active. Closure should never be emotional. It should be administrative. Always follow notice, opportunity to cure, and record completion. The equity way. What may remain open and how to handle it. Equity allows what necessity requires. Certain public contracts can remain open without compromising private standing, provided they are properly recorded and administered. Number 1, the Social Security number. This account identifies a public trust, not the living man or woman. You may keep it open for benefits or record keeping as long as it is clearly held in fiduciary capacity. You would file a trust resolution assigning the SSN to your estate trust or PMA. When using it, include notations such as, for reporting purposes only, administered by the trust name. Receive benefits as trust income, not personal income. Number 2, retirement accounts and pensions. Leave them open. Execute a notice of fiduciary custody so distributions flow into a private settlement account. Internally record All retirement proceeds are received in trust and held as estate property. Number 3, Medicare and health programs. Retain coverage until private health options exist. Equity never demands self-injury, it demands stewardship. And number 4, the bank accounts. Keep one public conversion account under the SSN for interaction with fiat currency. Transfer excess funds into the trust settlement account, which is EIN based. Maintain ledger entries for every conversion to preserve separation. This assignment is an internal fiduciary classification for estate administration and record keeping only, and does not assert ownership or control over the issuing agency or its statutory authority. The dual ledger principle. The competent fiduciary maintains two ledgers. They have the public ledger, which is identified by the SSN Public Bank SSA account. It is a statutory jurisdiction and it functions as it records interactions with agencies as a temporary holding only. The private ledger is EIN, trust accounts, and PMAs. Its jurisdiction is equity and contract, and it holds and manages estate assets permanently. Funds move from public to private through documented ledger entries and internal resolutions. This is how lawful separation is preserved, not through avoidance, but through accurate accounting. Retiring in the private. When you choose to retire, number 1, keep your Social Security account open as a fiduciary. Direct deposits into your trust account and file internal declaration, SSA account numbers, remains open for lawful benefit receipt under trust administration. If taxation is number 2, if taxation is required, file using the trust EIN, never the personal SSN. Number 3, avoid signing new forms in a personal capacity. Always sign by the name and then trustee for the trust name. You are not abandoning benefits, you are redirecting them under lawful management. Preparing for Series 3. By the end of this volume, you will know which contracts to close, which to retain, and how to record each decision. Have internal resolutions, ledger formats, and sample notices for your estate records. And you will be ready to enter Series 3, the Executor in Equity, where you will act upon these records to discharge, settle, and govern the estate fully. Our reflection: the private life is not an escape from law, it is the fulfillment of it. Operating privately means carrying honor into every transaction, receiving without attachment, acting without confusion, and recording without fear. Equity abhors confusion. Keep your ledgers clear, your intentions pure, and your operations lawful. That is the path from fiction to function. Chapter 1. Sorry, guys. The misinformation era. How myth replaced method. Introduction. The confusion of the modern freedom movement. We live in an era where half-truths travel faster than understanding. Across Telegram, TikTok, and countless YouTube channels, you'll find claims of secret trust accounts, hidden CUSIPs, or magic forms that erase all debt. Each promises the same result: freedom overnight. Yet none of them deliver equity, and few leave their followers in peace. For every sincere seeker who wants to claim their rights, there are dozens of voices offering instant sovereignty, bond redemption, and trust monetization, all missing the lawful foundation that Patrick Devine emphasized. Comprehension precedes correction. This chapter is about clearing the fog, not to shame anyone who once believed these myths, but to explain why they exist, how they misuse lawful terminology, and what the real path to private function looks like. Number one, the birth of the misinformation era. When Patrick Devine began teaching private administration, much of his material was grounded in practical record correction and administrative due process. Over time, fragments of those teachings were copied, reinterpreted, and commercialized by online gurus. As social media grew, so did confusion. Lawful equity doctrines were blended with UCC snippets, tax forms, and pseudo banking templates. People were told that all problems could be solved through paperwork instead of comprehension. The pattern repeated. Each new voice offered an easier, faster, or secret version of remedy, but always without the trust foundation or lawful record to support it. The result? Thousands of people making filings that pulled them back into the very jurisdiction they wanted to leave. The four common myths that trap the unprepared. Number one, canceling your Social Security and you'll be free. The claim was the belief that closing or revoking the Social Security number severs all public contracts. The reality? The SSN is a record of a public trust account. Closing it without a private replacement removes access to earn credit, benefits, and lawful evidence of work history. Lawful remedy is reclassification, not destruction. Number two, QSIP lookup proves you have a bond you can cash in. Claims that each birth certificate has a bond tied to your name and can be redeemed at the Treasury. The lawful reality? QSIPs track securities, not personal accounts. Treasury has repeatedly disclaimed such interpretations. The estate's true value is your capacity to contract privately, not a hidden fund. Number three, file a UCC1 and own your straw man. And the claim is the belief that listing the all caps name as a debtor on a UCC gives ownership of the legal entity. The reality? UCC filings record commercial interests. They don't change status or jurisdiction. Without proper trust structure, this filing is meaningless and may create new public liability. Number four, Treasury routing numbers let you pay debts directly. The claim that your Social Security bond or Treasury account can be used to settle bills electronically. The reality is that the routing numbers identify financial institutions, not personal trusts. Misusing them constitutes bank fraud. Lawful discharge occurs through trust settlement and fiduciary presentment, not through hacking public systems. Number three, why these myths appeal. These ideas persist because they offer relief without responsibility. They speak to people who sense that something is wrong with the system, but lack the legal grounding to articulate it. The promise of instant remedy taps into frustration, debt, and mistrust. Equity, however, doesn't offer shortcuts. It demands comprehension, preparation, and documentation. Freedom without foundation becomes another trap. Number 4, how lawful process differs from internet myths. The guru process acts in emotion and urgency. It focuses on public rejection. I cancel, revoke, or reject. Files endless paperwork with no trust or ledger, and operates as an individual man or woman against the system, and uses secrecy buzzwords and fear of government. The private path method acts in record and comprehension, focuses on lawful reclassification and fiduciary capacity, builds trust structure first, then administers lawful notices through it. It also operates as fiduciary for an estate already removed from the system. It uses equity, transparency, and lawful communication in honor. Number 5, the lawful framework, comprehension, capacity, and contract. The difference between fraud and freedom is capacity. A man or woman acting without capacity is seen as an agent of the fiction, but a man or woman acting in fiduciary capacity as trustee, executor, or administrator acts under the lawful office. This is the dividing line between public bondage and private function. When you operate as fiduciary, you acknowledge public records for what they are, evidence, not identity. 2, you reclassify your contracts and accounts under trust management. And 3, you maintain separation through documentation, not denial. That is the essence of lawful private function. Number 6, lawful application, the audit and assign exercise. To begin your private transition, you must first see your current landscape clearly. Step 1, audit every public account. Create a list of every active account, license, and registration attached to your all caps name. For example, the SSN or SSA benefits, DMV license or registration, bank accounts, voter registration, health insurance or Medicare, business license, and passport. Step 2, classify each contract. Mark each as either to be closed, to be retained, or to be converted to private trust administration. Step 3, assign oversight. For those to be retained, identify the trust or PMA that will manage it. Example, Social Security account number assigned to the estate trust name to be used for reporting and benefit receipt only. This audit becomes your foundation for chapters 2 to 5, where each contract will be addressed lawfully and in depth. Number 7, reflection. From curiosity to comprehension. The private path begins when curiosity becomes comprehension. Freedom isn't found in forms or filings. It's found in the calm understanding of what each document actually means. Once you comprehend, you can operate with peace. He who seeks equity must do equity. That means acting with understanding, documentation, and respect for lawful order. As we move into Chapter 2, Adhesion Contracts in Law and Equity, we will study what makes a contract binding, how to lawfully reassign it to your estate, and what documentation you must keep to maintain private standing without confusion. Chapter 2, Adhesion Contracts in Law and Equity. Understanding what binds the estate and how to reclassify it lawfully. Introduction. The invisible web of contracts. Every man and woman living in the United States is connected to an invisible web of contracts. Some were signed knowingly, others were entered through silence or presumption. Driver's licenses, Social Security enrollment, voter registration, tax filings, even opening a bank account. Each act forms an adhesion contract, binding the participant to a public jurisdiction through the legal name. An adhesion contract is a standardized agreement offered by one powerful party, usually the state or a corporation, with non-negotiable terms for the weaker party to accept or reject as is. It is not inherently evil, it is simply one-sided. In law, adhesion contracts are valid so long as they are not unconscionable. In equity, they are tolerated only so long as they serve necessity. Number 1. The nature of adhesion contracts. In law, adhesion contracts operate by presumption. They presume consent because you used the benefit. In equity, the question shifts. Who owns the benefit and under what authority? Equity asks, does this contract serve the estate or bind it? Was consent informed or presumed? And can the obligation be lawfully reassigned under trust administration? By answering these questions, you learn to move from subject to administrator, from the one bound by the contract to the one who governs it. The legal versus equitable view. In the consent aspect, the legal view is silence implies consent. The equitable view is silence can be rebutted through record and fiduciary declaration. Number 2, the aspect of ownership belongs to the state or issuer. An equitable view is belongs to the estate once reclassified under trust. The aspect of jurisdiction is that the legal view is its statutory. In the equitable view, it's contract and equity. In the aspect of purpose, the legal view is regulation, and the equitable view is administration. In the aspect of remedy, the legal view is lawsuit or compliance, and the equitable view is record correction, fiduciary notice, and reclassification. This is why Series 2 focuses on lawful function, not rejection, but reassignment. Number 3, how adhesion contracts are created. Most adhesion contracts are established through application and acceptance. Examples include signing of W-4 for employment. The presumed contract is the IRS reporting through the SSN. The effect is establishes taxable employee status. The next action is obtaining a driver's license. It's a presumed contract for DMV commercial license, and its effects is it creates jurisdiction for traffic enforcement. The next action is applying for Social Security, and the presumed contract is its federal insurance participation. The effects, it enters the estate into the SSA system. The next action is registering to vote. The presumed contract is political domicile under the state, and the effect is that it subjects the estate to state law. And the last action is the opening of a public bank account. Its presumed contract is the account is under the all caps name, and the effect is that it brings funds into statutory control. When you understand how they were created, you can understand how to lawfully redefine or terminate them. Number 4, lawful reclassification through the estate trust. Equity doesn't destroy, it redeems. You do not cancel adhesion contracts, you reclassify them under fiduciary administration. The process in principle. Number 1, identify the contract and its issuing authority. 2, declare fiduciary capacity as trustee, executor, or administrator. 3, assign the contract or account to your estate or PMA in writing. Number 4, record that declaration internally, trust minutes, ledger, or private notice. And 5, operate henceforth through that capacity, not as the individual name holder. The example, Social Security account number is hereby recognized as a public trust account administered under the estate trust name for lawful benefit receipt and reporting only. This declaration converts presumed ownership to fiduciary oversight. It doesn't reject the system, it reorders the relationship. Number 5, equity principles governing adhesion contracts. To operate successfully in the private while interacting with the public, you must apply the following equity maxims. Number 1, equity regards substance, not form. You can maintain the same account number or document. What matters is how it's held and administered. Number 2, who seeks equity must do equity. Always act in honor. Do not evade lawful obligations and reconcile them. Number 3, equity abhors confusion. Keep ledgers clean. Separate public transactions from private trust operations. And number 4, equity acts in personam, not in rem. Jurisdiction follows the person, the executor or trustee, who accepts the duty, not the property alone. By internalizing these, you transform from paper filer to fiduciary. Number 6, the contract audit and classification process. This is your first major working exercise of Volume 8. Before you can decide which contracts to close or retain, you must audit everything. Step 1, inventory. List every public contract, registration, license, or account tied to your all caps name. Use the worksheet that's provided in Chapter 11. And typical entries include the SSA, the DMV, the license, the voter registration, the passport, public accounts or bank accounts, business licenses, the health insurance or Medicare, and property titles still in personal name. Step 2, the classification. For each, decide whether it is to be closed, no longer needed, purely adhesion based, to be retained, functional or necessary, or to be converted to trust administration, retained but under fiduciary oversight. Step 3, the assignment. For every retained or converted contract, create a trust resolution assigning it to one of your private entities, whether it's the estate trust, PMA, health trust, etc. Each assignment includes the contract name and number, issuing authority, the purpose of the retention, a statement of fiduciary capacity, and signature by trustee or executor. Number 7, example of lawful contract assignment language. Resolution number 2025-08 fiduciary assignment of the SSA account. Be it known that the account identified as Social Security number is recognized as a public trust asset and shall henceforth be administered by trust name as fiduciary. All receipts, deposits, and communications shall be made in fiduciary capacity for the benefit of the estate. Not personal liability is assumed. The dated on this day of blank month and year, and then the trustee or executor name, the title of the trustee, and the trust name. Such resolutions demonstrate competence, not defiance. They tell the public I am operating in honor, not in confusion. Number 8, maintaining lawful separation. Once contracts are classified and assigned, keep two ledgers, one for public transactions, one for private. Record all crossovers, benefit receipt, conversions, or transfers. File annual minutes of fiduciary reviewing summarizing contract status, and never mingle personal and trust signatures. This administrative discipline is what allows you to interact with the public without ever falling back under its jurisdiction. Number 9, preparing for lawful closure. Next chapter preview. In Chapter 3, we will cover the contracts that must be closed, voter registration, DMV licenses, and business filings under the all caps name, along with sample notice scripts and replacement procedures within your trust and PMA. This is where equity becomes action, learning how to exit publicly, function privately, and remain provisioned through lawful administration. Reflection, the flower of clarity. Confusion creates adhesion. Clarity creates administration. Every contract you properly classify brings you closer to lawful autonomy. This process isn't about running from the system. It's about proving you can govern yourself. He who understands the nature of the obligation controls it. Equity maxim applied to private administration. Caveat: birth certificates, marriage licenses, and the deep adhesion layer. Some adhesion contracts are so foundational that people forget they are contracts at all. Two of the most significant are: number 1, the certificate of live birth, your birth certificate, and 2, the state issued marriage license. Both are instruments of registration, not recordation, and both serve as entry points for public jurisdiction over what should have been private relationships, your estate and your family. The birth certificate, the original contract of surety. The certificate of live birth is not evidence of you, it is evidence about you. It represents the creation of a registered estate, a transmitting utility under the all caps name, held as collateral for the state's debt. In Series 1, Volume 2, the Treasury Direct Liquidation in Patrick Devine's final system, you learned how to liquidate that registered bond. By identifying the certificate of live birth as an instrument of surety, by issuing voting trust termination and final liquidation notices, and by reestablishing the birthright trust as the lawful estate of the living man or woman. That liquidation process ends the presumption that the estate is a publicly traded franchise, but it does not remove the record itself. It reclassifies it. Here in Volume 8, you learn how to function afterward, how to keep your Social Security and lawful retirement benefits without resurrecting that public franchise. The key point: liquidation. Series 1, Volume 2 equals ending the bond relationship. The function Series 2 of Volume 8 equals administering life in honor after the bond is retired. Once the birth certificate has been liquidated, the executor in equity, which you'll study formally in Series 3, continues to maintain a record of life, but no longer as a registered subject. Thus, your daily management, whether banking, receiving benefits, or signing contracts, must reflect that reclassification. You are operating as trustee for the birthright trust estate, not as the person created by the birth certificate. The marriage license, contract of joinder. The marriage license functions as a state-sponsored merger of two estates under the state's jurisdiction. By accepting a license, both parties grant the state partial interest in their union, particularly in property, offspring, and inheritance. This is why, in public law, the state can intervene in divorce or child custody, because it holds the position of silent third-party beneficiary. In equity, equity sees marriage differently. The union itself is sacred and private. The license is commercial privilege that can be replaced with private marriage covenant agreements recorded under your PMA or family trust. If you are already married under a public license, you need not cancel it immediately. Instead, as we teach here in Volume 8, you transition its administration. Number 1, you record your private marriage declaration inside your family trust or PMA. 2, you file a notice of private covenant with the county recorder for recordation, not registration. And 3, you maintain trust minutes, noting that the state's license remains for public record only, while all property, obligations, and heirs are administered under your private family trust. This approach maintains lawful peace while slowly removing the state's benefit interest. How these caveats tie into Series 1, Volume 2. Series 1, Volume 2 was about liquidation, the termination of public adhesion instruments, and the transfer of jurisdiction to your private trust structure. This volume continues that process by teaching administration. In Series 1, Volume 2, you learn to terminate the public estate franchise, which is the birth certificate bond, issue final liquidation and trust termination notice, reclaim collateral to private treasury account, and end adhesion presumptions. In the Series 2, Volume 8, the function, it manages what remains lawfully and functionally in the private. It also establishes lawful daily operation after liquidation. It reconciles retained public contracts like the SSN, retirement, and banking. And it prevents readhesion through proper documentation and fiduciary oversight. Thus, you can think of Series 1, Volume 2 as closing the old world, and Series 2, Volume 8 as learning to live in the new one. Full separation caveat. If you ever choose to fully close your SSN and all public contracts, you must ensure that 1, your birthright trust from Series 1, Volume 1 is fully funded and active. Number 2, you have created replacement trusts for 1, the private retirement trust, which receives annuity and investment income. 2, the private health indemnity trust, which covers medical needs. 3, a family trust or PMA, which manages daily expenses, property, and utilities. And number 4, a special needs trust, if applicable. supports any dependent or disabled beneficiary who may otherwise rely on SSA benefits. Number 3, your trust bank account, which is EIN based, can lawfully handle all deposits and disbursements. And 4, your record of liquidation from Series 1, Volume 2 is kept in your estate ledger, serving as the formal proof that all former adhesion accounts were closed in equity. Without these structures, closing your SSN or marriage license prematurely could create financial or medical hardship, effectively throwing the estate back into public dependency. Equity never demands self-injury, it demands stewardship. The transition summary. The birth certificate in Stage 1 is from Series 1, Volume 2, liquidation. Then also the function in Series 2, Volume 8, the estate operates privately. Stage 3 is where the executor administration comes in and the executor manages the estate assets. For the marriage license, Stage 1 is optional replacement with a private covenant. And Stage 2 is the family trust or PMA handles the marital property. Stage 3, the executor recognizes marriage under trust. For the SSN, in Stage 1, you retained or closed with proper trusts. And Stage 2, the fiduciary administration. And Stage 3 is the executor level reporting only. For benefits or retirement in Stage 1, you learn to redirect to private trusts. Stage 2 is managed via the fiduciary accounts. And Stage 3 is settled as estate distributions. Our reflection, comprehension creates continuity. The liquidation process means little unless you know how to live lawfully afterwards. Closing a bond is an act of reclamation. Learning to manage life beyond that bond is the act of mastery. This is where From Fiction to Function earns its name, by guiding you from liberation into lawful livelihood. Freedom without administration is fantasy. In the private realm, continuity is the new currency. When you can maintain your life, assets, and family without readhesion, you are truly free. Next in Chapter 3, Lawful Closures, Contracts That Must End, we'll move into the practical side. Step-by-step closure of DMV, voter registration, and other adhesion contracts with templates for notices of rescission and private replacement declarations under your trust. Chapter 3, Lawful Closures, Contracts That Must End, Releasing Public Adhesion while Maintaining Continuity in the Private. Introduction. Why certain contracts must be closed. Every private transition begins with discernment. Some public contracts can safely remain open for function. Others carry a jurisdictional weight that no fiduciary should continue to bear. This chapter identifies the adhesion instrument that signal domicile, adhesion, or political status, and teaches you how to terminate them lawfully and peacefully while maintaining full continuity through your private trust or PMA. Remember the maxim, equity acts in honor, not rebellion. We don't destroy records, we replace them with proper administration. Number 1, recognizing contracts that establish public domicile. 3 common contracts directly evidence public jurisdiction. The first contract is the voter registration. Why this creates adhesion? It It declares political allegiance and domicile within a state. The private replacement is private domicile declaration and notice of non-participation filed under trust seal. For the driver's license contract, if you keep it, the adhesion is it establishes status as a state licensed commercial operator. In the private replacement, you can do the private travel indemnity agreement and trust vehicle registration. For the business license in the all caps name, this binds enterprise to statutory regulation under the public persona. And in the private replacement, you use a PMA or business trust formation with an EIN for lawful private operations. These instruments tie the estate to the political body of the state and must be reclassified or terminated before the estate can function freely. Number 2, the voter registration, the silent domicile. Voting is a political act performed by members of a body politic. When you register, you confirm domicile under state authority. In equity, a fiduciary cannot serve two masters, the state and the trust simultaneously. Steps of lawful rescission. Number 1, create a notice of non-participation in the political body, signed by trustee or administrator. 2, mail it to the county registrar of voters with certificate of mailing for record. Number 3, file the same notice in your trust minutes under public contract closures. Number 4, this is optional. Record a private domicile declaration with your county recorder as a public record only. This notice does not reject government. It clarifies that you administer your estate privately. Number 3, the driver's license. Commercial privilege versus lawful travel. A driver's license is a commercial permit to operate a motor vehicle for hire. Most people don't realize that they consented to commerce when they applied. The lawful replacement process. Number 1, draft a private indemnity and travel agreement within your trust, naming the vehicle and assigning liability to the estate. 2, issue a trust vehicle registration certificate, numbered and signed by trust administrator. 3, file an internal resolution authorizing trustees to operate estate property for private use only. Number 4, maintain proof of insurance or bond coverage through the trust. And number 5, when ready, send a notice of rescission of commercial license to the DMV with copies of your record. Caveat, do not terminate your license until the trust vehicle registration and indemnity coverage are fully in place. Equity never demands self-injury. Number 4, public business licenses and registrations. Operations under a state business license keeps you under corporate jurisdiction. To function privately, you do number 1, form a private membership association or a business trust. 2, adopt articles of association or trust declaration. 3, file a notice of conversion to private entity with the state or county office where the license was originally filed. And 4, close the public license account through written notice, retaining copies for your trust ledger. Your EIN issued for the trust becomes your lawful identifier, replacing the all caps name license. Number 5, record keeping requirements. All closures must be documented internally. For copy of notice of rescission or non-participation, You should keep it in your trust minutes binder or digital archive. And the purpose is for proof of lawful termination. For proof of mailing or deliveries, attach to the notice a copy. This establishes administrative record. For trust resolution authorizing closure, you're going to maintain in your minutes and ledger, and this demonstrates fiduciary authority. For replacement trust documents, you're going to keep that in your estate operations folder, and this maintains continuity of function. When you maintain clear records, you replace risk with lawful order. Number 6, lawful language for notices. This is a sample of the notice of rescission for the license or registration. To the agency name, and then the trust name is from and by and through its administrator. Please take notice that the license or registration identified as number or type was entered into under presumption and is hereby rescinded for cause. This notice does not constitute refusal of lawful obligation, but a transfer of administration to the private estate known as the trust name. All future communications regarding this matter shall be addressed to the trust office of record. And then your date, the trustee or administrator's name, the title, and the trust name. Continuity through private replacement. For each public closure, ensure a private replacement is operational before you finalize termination. For the voting or political participation, a trust resolution of private domicile and civic intent. For the driver's license or travel privilege, you want to make sure you have trust vehicle registration and private indemnity. For the business license, you want to make sure you have your PMA or business trust declaration. For the notary or professional license, you make sure that you have a private certificate of competency within the PMA. And the state marriage license, you make sure you have your private marriage covenant. See Chapter 2 caveats. Each closure without the replacement creates voids that equity abhors. The goal is not withdrawal, but reorganization. Number 8, how these closures tie back to Series 1 and Series 2. In Series 1, Volume 2, you learned how to liquidate adhesion instruments like the birth certificate and reassign surety to the private treasury. In Series 2, Volume 8, you are now learning to operate without renewing adhesion, closing the remaining public ties and replacing them with private mechanisms that honor that liquidation. Thus, every lawful closure here is a continuation of the liquidation process. You are finishing what you began in Series 1, Volume 2, but doing it functionally, not symbolically. Reflection, closing and honor. A fiduciary who acts in haste creates voids. A fiduciary who acts in honor creates continuity. These closures are not about escaping responsibility. They're about taking responsibility for your own jurisdiction. Equity delights in substance, not form. Whether you drive, trade, or reside, do so in truth and record. When you close with honor and replace with structure, you rise from fiction to function. We're missing page 59, doesn't want to show up. Lawful retention, contracts that may remain open, preserving function without re-entering the public. Introduction. Not all contracts are the enemy. After closing contracts that signify domicile or political status, the next step is discernment. Certain public instruments, like the Social Security number, Medicare, and even public bank accounts, can remain open as administrative tools if handled correctly. Operating privately does not require destroying everything linked to the public. It requires mastering the lawful separation between what serves you and what binds you. In equity, this is the principle of lawful retention, retaining only those contracts that serve necessity under trust authority without reattaching to public jurisdiction. Number one, understanding lawful retention. Lawful retention means continuing to use or reference a public contract for limited fiduciary purposes while acknowledging it is an external account, not personal identity. Examples include receiving earned retirement or disability benefits through the SSA account, using a public checking account to convert funds into your private trust, and keeping a Medicare number for lawful medical coverage. Each retained contract must have clear administrative boundaries, recorded in writing within your trust or PMA minutes. The key maxim: equity allows what necessity requires. The duty of the fiduciary is to govern necessity without surrendering jurisdiction. Number two, the Social Security number, account versus identity. The Social Security number is often misunderstood. It identifies a public trust account, not the living man or woman. Closing it prematurely would terminate both reporting and benefits records that may serve legitimate estate functions. Proper lawful retention steps. Number one, assign the SSN to your estate trust through a trust resolution. 2. Declare in writing that it is used for reporting and benefit receipt only. 3. Operate all trust banking, invoicing, and filings through your EIN, not the SSN. And 4. Record annually in trust minutes. The SSA account remains active for limited fiduciary use under trust administration. All proceeds or correspondences are handled in private capacity as trustee. Sample trust resolution of purpose, the SSN account. Your resolution number 2025-04 and fiduciary use of SSA account. It is resolved that the account known as Social Security number is recognized as a public trust account and shall remain open solely for the purposes of record continuity and lawful benefit receipt. All reporting and correspondence shall occur under the EIN of the trust name, by fiduciary signature only. No personal liability or political allegiances is assumed. And then you give your date that it was executed, your trustee or administrator name, the title, and the trust name. This assignment is an internal fiduciary classification for estate administration and record keeping only, and does not assert ownership or control over the issuing agency or its statutory authority. Number 3, Medicare, Medicaid, and health programs. Health benefits are not merely conveniences, they are lifelines. Equity never demands you abandon lawful medical care. It simply asks that you manage it correctly. Lawful retention framework. Number 1, keep enrollment active if necessary, but record it as a public benefit under trust administration. 2, fund premiums from your health indemnity trust or estate account rather than your personal account. 3. File an internal declaration. Participation in Medicare is retained for necessity only, and all related obligations are administered under the trust name. Optional, notify the insurer or provider that correspondence should be addressed to the trust, not the individual. The Private Health Indemnity Trust, the overview. A trust dedicated to funding and reimbursing medical expenses through lawful private administration is funded by estate assets or private annuities. It may reimburse Medicare copays or private doctor fees, and it protects beneficiaries from government interference or claim of overpayment. Number 4, public bank accounts and private settlement channels. A public bank account linked to an SSN functions as a conversion point between public and private currency flows. It should never hold estate assets, only transient funds for exchange. The proper structure: keep one public checking account for conversions only. Open a private settlement account, which is EIN based, under your trust for all ongoing operations. And when the SSA or retirement payments are received, transfer immediately to the settlement account. Record the transfer as public conversion deposit in your trust ledger. A sample ledger entry: on July 1st, 2025, the SSA deposited to the public account. The destination account was the estate settlement account in the private. The amount that was transferred was $2,100, and its purpose was for monthly benefit conversions. And your notations, you can put funds received from the SSA account reclassified as estate income. This method maintains full transparency and lawful jurisdictional separation. Number 5, your trust resolutions of purpose, defining each retained contract. Each retained contract, for example, the SSN, Medicare, public account, etc., should have its own trust resolution purpose. This creates a written firewall between you and the public record. A sample resolution template: your resolution number, the year, and then the number. Purpose declaration for retained contract: be it resolved that the contract known as the type of account or license that remains active for the limited purpose of state reason, reporting medical access, conversion, etc. Said contract is acknowledged as a public record account, not a private estate asset. All obligations, benefits, or communications related thereto shall be administered through the trust name under fiduciary authority only. And then you put your executed date, the trustee or administrator name, the title, and the trust name. Keeping such resolutions on file ensures every agency interaction can be traced back to your private authority. Number 6, maintaining transparency without reattachment. Transparency and equity protects the fiduciary. Always communicate with agencies or institutions in clarity and honor. Use your trust title by the name and then the trustee for trust name. Never sign in the personal capacity. Maintain separate correspondence files for the SSA, IRS, or medical providers. Avoid public language such as "I am not a U.S. citizen." Instead say, "I act in fiduciary capacity for a private estate." goal is not confrontation, it's competence. Public officials recognize lawful administration when it's presented respectfully and with record clarity. The executor's ledger. Tracking retained accounts. Even before Series 3 Executor and Equity training, you can begin maintaining executor ledgers. This ledger lists every retained public contract, its assigned trust, and the fiduciary actions taken each year. And I'm not going to go through the example. You guys have it in your ebooks. Keeping this ledger demonstrates ongoing jurisdictional separation, the hallmark of lawful private administration. Number 8, fiduciary etiquette in public communication. Always remain polite and factual. Officials are often unaware of private jurisdiction. Provide copies of your resolutions only upon lawful request, never originals. Never argue sovereignty or freedom. Speak the language of true trust administration. Remember that lawful remedy is achieved through correspondence, not confrontation. A professional example. Thank you for your correspondence. This account is administered through the trust name. Please address all future notices to the fiduciary office of record. Number 9, continuity and peace. When lawful retention is handled properly, you preserve comfort and peace while maintaining full private standing. You can receive benefits, pay for medical care, and interact with the banking world all through your estate framework without reopening adhesion. Equity allows what necessity requires, but never excuses confusion. Clarity is your protection. The man or woman who knows what each contract represents can use it lawfully without being used by it. Our reflection, the balance of wisdom and structure. This chapter represents maturity in your private journey. Freedom is not about closing every door. It's about knowing which doors to keep open and how to guard them. You now understand how to retain the SSN, Medicare, and public banking lawfully, how to record fiduciary use through trust resolutions, and how to maintain the executor's ledger for transparent accountability. In the next chapter, we move into Chapter 5, Retirement and Social Security in the Private Realm, where you will learn to receive benefits, structure private annuities, and lawfully secure your retirement within your estate. 71, come on. Chapter 5, Retirement and Social Security in the Private Realm, receiving benefits lawfully while remaining private. Introduction. Freedom does not mean forfeiture. Many people fear that moving into private status means losing the retirement or disability benefits they worked for decades to earn. In truth, equity never cancels lawful consideration already given. If you contributed labor and taxes into the SSA system, the estate is entitled to those returns. The difference lies in how they are received and administered as fiduciary income, not personal gain. This chapter explains how to lawfully receive Social Security or pension payments in the private realm, how to use a private settlement account for conversions, how to report income under fiduciary capacity using the EIN, and how to maintain annual trust minutes for transparency and estate protection. Number 1, reclassifying retirement benefits. All benefits paid by the SSA are trust distributions, not gifts. When you act as a fiduciary, you are no longer the beneficiary citizen, but the executor administering an estate account. Thus, you must reclassify the SSA relationship from personal recipient to fiduciary custodian. Steps to reclassification. Number 1, adopt a trust resolution of purpose, the SSA account administration. Number 2, send a fiduciary notice of SSA account administration. There will be a template below to your regional SSA office. Number 3, route all future deposits to your private settlement account, which is EIN based. And 4, record this change in your annual trust minutes. The key concept: you are not opting out, you are shifting from public beneficiary to private fiduciary custodian. Number 2, template, the fiduciary notice of SSA account administration. You're going to address that to the Social Security Administration and from the trust name by and through its administrator. Notice is given that the account identified as Social Security number is a public trust account administered under the private estate known as the trust name. All payments and correspondence shall be handled in fiduciary capacity and credited to the trust settlement account identified as the EIN or the account number. This notice confirms lawful administration and does not waive any rights or benefits due to the estate. And then, of course, your date executed, the trust or administrator name, title, and the trust name. Number 3, creating the private settlement account. The private settlement account is the bridge between public distributions and private operations. It receives the SSA deposits but belongs to the trust, not the individual. The opening requirements: use the trust EIN. The 81 or 82 is the main one. We're just using the 98 as an example. Then the next thing is the title the account exactly as the trust reads. For example, the trust name and then the private fiduciary account. Keep a separate ledger tracking every income, benefit, and subsequent transfer. And transfer funds to operational trust accounts monthly for expenses or investments. And then you have your ledger, like what should be written on the ledger. All entries should be signed or initialed by the administrator. Number 4, reporting income lawfully in the private. When you operate as a fiduciary, benefits received by the trust are trust income, not personal income. The trust uses its EIN for any necessary reporting. The guidelines: use Form 1041 if the trust has taxable income that is not fully distributed. If distributions are for beneficiaries like living expenses, medical care, etc., record them in the trust ledger as beneficiary support expense. And never mix SSA funds with personal accounts. A note: operating through EIN preserves the trust status and keeps the executor free from public jurisdiction. Number 5, annual trust minutes for the SSA reconciliation. Each year, record in your minutes that the SSA account remains lawfully administered. Suggested minutes entry, I'm already getting tongue-tied. The trust administrator reviewed the SSA account for the period ending December 31st of 2020, whatever. Benefits were received and converted through the private settlement account. All funds were used for estate maintenance and beneficiary care. No personal liabilities exist. Attach supporting statements and mark the entry filed private record only. Number 6, integrating pensions, 401ks, and private annuities. If you hold retirement plans in the public sector, treat them as convertible assets, not canceled ones. Your options: assign ownership to the trust via beneficiary designation update. Upon withdrawal, deposit proceeds into your private settlement account and use proceeds to fund a private annuity trust that pays you regularly under the trust resolution. This creates continuity of income without public taxpayer identity use. Number 7, protecting heirs and avoiding estate seizure. When a decedent passes while still attached to the public system, agencies often seize benefits or tax refunds to offset public debts. When benefits flow through the estate trust, that risk is neutralized. Name the trust as the beneficiary on SSA and pension records. Keep an updated succession appointment resolution inside your minutes, and designate a successor trustee authorized to receive benefits and continue management. This ensures continuity without probate or third-party intervention. Number 8, this caveat: do not close your SSA account without replacements. Equity requires stewardship, not self-harm. Before considering full closure of your SSA or retirement accounts, make sure you have: 1, a private annuity trust funded to replace the SSA income; 2, a health indemnity trust to cover medical needs; and 3, a family trust or PMA for daily expenses. Without these structures, closing SSA benefits creates dependency, risk, and voids in estate support. Number 9, reflection. Private peace in public provision. The goal is not to deny benefits, but to receive them lawfully. The SSA account remains a doorway, not a bondage, but to redemption through comprehension. He who administers in equity may receive without attachment. When your estate is structured and documented, you can retire with peace, knowing your labor's fruits return lawfully to the private side. Another caveat: understanding and opening lawful settlement accounts. The term, the term settlement account has been widely misunderstood. In the lawful equity model, it simply means a fiduciary trust account used to receive and reconcile value, not a secret treasury window or redemption portal. The goal is lawful administration, not speculation. Number 1, 2 primary types of settlement accounts. You have your administrative settlement account. It's used for correspondence and reconciliation with Treasury or other agencies and holds no spendable funds. Excuse me, I need to drink some water. You can get a foreign grantor's trust designation, but you can't open the 98 EIN domestically because we have the KYC, know your customer rules. So if you're going to do the 98, you need to do that offshore. The best one is the 81 or 82. The jurisdiction use is record-based, not a bank deposit account. It's used for lawful filings, notices, and offset documentation. Then you have your private fiduciary settlement account. This is used for receiving legitimate distributions such as SSA, pensions, or private income. This converts public deposits into private trust receipts. The 81 or 82 EIN, which is a domestic trust management company, or a business trust EIN. And the use is domestic fiduciary bank account for day-to-day management. The key principle, the 98 EIN identifies a foreign trust for record purposes only and should not be used to open a U.S. retail bank account. Your lawful banking activity occurs through the 81 or 82 EIN under trust authority inside the United States. Where to open a private fiduciary settlement account. When selecting an institution, look for one that recognizes trust, estate, or custodial accounts rather than retail consumer accounts. Examples include a regional or community bank that often allow trust or estate accounts, titles with EIN verification. A credit union. Many offer estate and fiduciary accounts for non-business trusts. Private trust companies or boutique banks. Institutions that specialize in fiduciary or family office banking. Registered money service providers, MSPs. Some fintech institutions permit trust-based settlement accounts if proper documentation is presented. When opening an account, bring your trust declaration, your EIN letter, and trust resolution authorizing the account. Use language such as, this account is for fiduciary settlement of the estate receipts and obligations under trust administration. Avoid large commercial banks that require individual SSN verification for every signatory. Their KYC systems are built for public entities, not private trusts. 3. Steps to open a lawful settlement account. Number 1. Select which trust entity will hold the account. Is it the estate trust, the TMC, or the PMA? Number 2. Pass a trust resolution authorizing the opening of a fiduciary settlement account. Number 3. Gather documents, your trust declaration, EIN assignment letter, and resolution. Number 4. Open the account in the exact trust name. Number 5. Record the account details in your trust ledger and minutes. 6. Use it strictly for its authorized purpose, whether it's the SSA benefits, pensions, or estate receipts. And number 7. Maintain clear ledger entries for all transfers between this account and any operational trust accounts. Number 4. Keeping administrative and operational channels separate. Do not combine your administrative settlement account for discharge paperwork with your private fiduciary settlement account for benefit receipt. Keep 2 distinct records, and if both exist, 2 distinct EINs. The 98 EIN for correspondence and treasury record settlements. You can see Series 1 for that. And 81 or 82 EIN for domestic fiduciary banking and public to private conversions in Series 2. This upholds lawful separation and protects the estate from readhesion. Number 5, about the SPC filing. The Secured Party Creditor or UCC1 filing is a notice of interest, not a banking credential. Banks do not recognize it as authority to open accounts. You may retain it in your trust record as proof of superior claim over the all caps name entity, but it plays no functional role in settlement account setup. Number 6, transferring between accounts. When funds move between public and private channels, 1. The SSA or pension deposit arrives in the fiduciary settlement account. And then 2. The trust administrator records transfer to the estate's operating or family trust accounts as public benefit conversion. Number 3. All entries appear in the trust ledger as annual minutes. No personal signatures, no commingling, and always under trust seal. The reflection, function with precision. The mark of a lawful fiduciary is clarity. When you understand why the 98 EIN stays private and how the 81 or 82 EIN supports domestic trust banking, you eliminate confusion and build credibility. A well-structured settlement system lets you live comfortably in the private while maintaining peace with the public. Chapter 6, Health Coverage, Medicare and Medical Liabilities. Maintaining lawful care without re-entering public jurisdiction. Introduction, Health as a Fiduciary Duty. Health is not merely a personal matter, it is a fiduciary responsibility. Every trustee or executor must ensure that the estate and its beneficiaries remain protected from medical liability and undue hardship. For many, the greatest confusion arises around Medicare, Medicaid, and insurance policies. Students often ask, if I live privately, can I still use Medicare? Do I have to forfeit my health care coverage to remain in equity? The answer is no. Equity does not demand deprivation. It demands order. This chapter shows how to lawfully use necessary healthcare systems while maintaining private standing through trust administration. Understanding the public healthcare system versus the private administration. The public program is the Medicare or Medicaid, and it provides federal or state subsidized health care for seniors or low-income individuals. Its nature and jurisdiction is a public insurance contract under the SSA. And the lawful approach is it may remain open for necessity, administer via trust fiduciary notice. An employer health plan. The benefit is through the W-2 employment. The jurisdictional nature is a private contract under public tax status. And in the lawful private approach, you can replace it with a PMA or trust health agreement. For private insurance policy is a commercial coverage with insurer, and its jurisdictional is private but still registered under the SSA. You can reassign to Health Indemnity Trust as policyholder. For cash or self-funded care, direct payments to the providers. And then the jurisdictional nature is fully private when paid from trust account. And for the lawful private approach, it's preferred method for private domicile members. The goal is not to reject Medicare or insurance, but to administer them through your estate. Number 2, the Health Indemnity Trust, an HIT. Your private medical structure. The Health Indemnity Trust or Medical Expense Trust is a sub-trust under your estate dedicated to funding and reimbursing all medical needs. Its purpose and functions is to pay medical expenses directly from the trust assets, reimburse any Medicare or insurance copays. It holds private medical records and indemnity agreements, and may receive contributions from family trust or private annuity trust. Its funding sources, annual distributions from the estate trust, private annuities or retirement payments, and fiduciary settlements from insurance claims. A sample trust clause. The Health Indemnity Trust shall provide for the payment of medical, dental, and therapeutic care for the beneficiaries of the estate. All claims shall be settled in equity through fiduciary administration. No personal liability shall attach to any trustee or administrator for such expenses. Number 3, How to use Medicare lawfully while remaining private. If you already receive Medicare, you may retain it for necessity under fiduciary administration. The steps. Number 1, keep Medicare enrollment active for medical necessity. 2, adopt a trust resolution for purpose, Medicare administration, stating the trust oversees all obligations and reimbursements. 3, pay any premiums from the Health Indemnity Trust account, not a personal account. Number 4, send a courteous notice if desired. This coverage is administered through trust name. All communications may be addressed to the trust office of record. 5, keep a copy of the card and records in the trust binder marked Public Program Private Administration. This keeps you within lawful standing without reestablishing personal domicile. Number 4, handling insurance claims through trust contracts. All insurance activity must flow through the Health Indemnity Trust when filing a claim or receiving payments. So step 1, you submit the claim as the trust name by its administrator. And 2, or record it, you keep a copy of the claim form and receipt in the trust ledger. Step 2, receive reimbursement into Health Indemnity Trust account and record it in the ledger entry insurance reimbursement received, classified as a trust income. Number 3, pay providers directly from the trust account. Attach invoices and trust check copy to the ledger. And step 4, file annual health expense summary in minutes. And then record year-end balances and resolutions. Sorry, guys. Number 5, privately funding medical expenses using trust assets and annuities. Equity prefers provision over dependence. Use trust assets to establish long-term medical funding. The private annuity trust, which pays monthly stipends into Health Indemnity Trust. The family trust resolution allocates annual medical budget. The investment income. Trust may hold bonds or equities dedicated to medical reserves. And donor funding. Members of a PMA may contribute to a shared health indemnity fund. Sample resolution. Resolved that the sum of X dollars per month shall be transferred from the estate trust to the Health Indemnity Trust for the benefit of the trustee and beneficiaries to cover medical expenses and health provision. Number 6, liability and indemnification. To protect trust assets from medical claims, include a hold harmless clause in all agreements. Ensure medical providers bill the trust entity, not the individual. And if a provider demands SSNUs, state, this account is administered by trust. Please bill the fiduciary account on file. Keep copies of all communications in your trust ledger. Number 7, when to replace public coverage entirely. Some trustees choose to phase out Medicare or insurance entirely after the Health Indemnity Trust is fully funded. Before doing so, ensure adequate reserves exist for at least 2 years of medical expenses. Secure private agreements with your providers or PMA network. And record a final resolution transferring liability to the trust. Never close public coverage without an equivalent private provision in place. Equity never requires self-injury. The reflection, health as honor. He who seeks equity must do equity, even with his own body. Administering health care in the private is an act of honor and responsibility. When you fund your health indemnity trust, Maintain records and communicate lawfully. You demonstrate true trusteeship in action. You live freely and securely, not by rejecting the world, but by governing your part in it. Sorry. Chapter 7, Public Banking versus Private Settlement Accounts. Managing both sides lawfully, clearly, and in honor. Introduction. Why two worlds still exist. Even after reclaiming your estate, some form of public interface remains necessary. Electric utilities, SSA deposits, and pension funds transfer all move through the Federal Reserve's commercial rails. Equity does not forbid this, it governs it. The competent fiduciary must understand how to lawfully interact with the public banking system without re-entering adhesion. This chapter shows how to maintain one public conversion account while keeping your estate protected through a dual ledger system. A fiduciary settlement account is a conventional trust bank account recognized by financial institutions. It is not a treasury account, redemption window, or offset mechanism. Understanding public banking versus private banking. The aspect of the jurisdiction between the public, it's a statutory and commercial. The private settlement trust is equity or fiduciary. The identifier that you're going to use in the public would be the SSN or public EIN. And then in the private settlement, it would be the trust management company or a PMA with an 81 or 82 series EIN. And the purpose for the public banking, it's deposit payment exchange. For the private, it's a settlement of estate receipts and obligations. In the aspect of the ownership, the public banking is a legal title held by the bank. In private settlement, it's equitable title held by trust. For the record type, the public banking is an account statement. On the private side, it's a trust ledger and minutes. And the risk for the public banking, it's an adhesion through personal use. For the private settlement, it's re-adhesion only if mixed with personal funds. You are not abandoning public banking. You are recategorizing your use of it under trust administration. 2. Keeping one public conversion account. Every estate may lawfully keep one public account solely for conversion purposes. This account receives SSA, pension, or insurance deposits, transfers funds to the private fiduciary settlement account, and holds no estate assets longer than necessary for conversion. The best practice is title the account as the trust name conversion account. Use an EIN of 81 or 82 for record identity if bank allows, or retain existing SSN account but administer under the trust minutes, and record every transfer in the trust ledger as a public conversion deposit. Rule of equity: use public tools without surrendering private title. Number 3, setting up your private fiduciary settlement account. This account is your private banking base for estate operations. It functions under your trust EIN, the 81 or 82 series, and should be opened as a fiduciary account. Your setup checklist is 1. Your trust resolution authorizing the account. 2. Your trust declaration and your EIN letter. 3. Open at a bank that permits estate or fiduciary or trust titles. 4. Designate authorized signatories as trustees or administrators only. 5. Deposit initial funds from estate capital or converted SSA distributions. And 6. Record each transaction in the ledger and minutes. A fiduciary settlement account is a conventional trust bank account recognized by financial institutions. It is not a treasury account, redemption window, or offset mechanism. Bear with me. My lips are chapped. Number 4, the dual ledger system, managing both sides lawfully. The dual ledger system is what keeps the estate secure. It divides activity between two records. For the public conversion ledger, this covers SSA deposits, pensions, and insurance checks, and its identifier is the SSN or public account number. And it is maintained by the trust administrator. Private estate ledger is converted funds, trust disbursements, annuities, and health trust transfers. The identifier is the 81 or 82 EIN, and for example, your trust management company is the one that manages it. Each ledger reflects the movement of funds between jurisdictions. Nothing is hidden, it is simply accounted for under different lawful authority. Recording transfers between accounts. When funds move from the public conversion account to the private fiduciary account, record it as a lawful transfer of jurisdiction. And you have your example there. All supporting documents like deposit slips, transfers, and bank statements should be kept in the trust record. Number 6, banking etiquette and fiduciary language. When dealing with bank officials, clarity and professionalism preserve your standing. Sample language. This account is administered by the trust name as a fiduciary settlement account. It receives benefit distributions and operates under trust authority for private administration. Never use sovereign or private bank or redemption language. Stay within ordinary banking terminology. That's what keeps you in honor. And then you have your template of the notice of fiduciary transfer. I'm not going to go over it. Number 8, common errors to avoid. Number 1, mixing personal funds. Never deposit private income or personal transactions into trust accounts. 2, multiple SSN accounts. Keep only one public conversion account. 3, no ledger entries. Every transfer must be documented. 4, ambiguous signatures. Always sign as the trustee for the trust name, not individually. Number 5, informal language. Use professional banking terminology, not freedom movement jargon. Number 9, equity perspective. The two-book method. Patrick Devine often referred to the two-book method. Book 1, the public record, held by banks and agencies. Book 2, the private record, your trust ledger and minutes. When your two books agree, you stand in honor. When they conflict or you hide records, you invite liability. Equity rewards transparency with peace. 10. Reflection. Mastery is measured in order. He who administers two jurisdictions without confusion has found the balance of freedom. Operating in the private does not mean rejecting the public. It means commanding the interface lawfully. With a dual ledger system, clear resolutions, and fiduciary correspondence, you can receive, convert, and use public funds without ever losing your private standing. Chapter 8, Full Separation Path, Closing the SSN and Living Entirely Private. For those prepared to transition completely out of statutory identification systems. Introduction, Freedom with Foundation. Closing a Social Security number is often romanticized online as the final step to freedom. In truth, it is a fiduciary decision of great consequence. The SSN is not simply a tracking number, it is the account reference for a lifetime of records, wages, benefits, tax filings, and medical history. When you close it, you must already have replacement structures to lawfully manage every function it once served. This chapter shows what closing the SSN actually means, what it terminates, and what must stand in its place before you issue any final affidavit of retirement. Full separation from all public systems is not required for private standing and is not appropriate for most estates. This path is presented for advanced fiduciaries with complete replacement structures already in place. What closing the SSN actually terminates. The SSN account or the SSA account access, the benefits, reporting, and wage history cease to update. The W-2 or employment filing. The estate can no longer receive income through statutory employment. Federal tax interface. The IRS records tied to the SSN close. Future filings must occur under the trust EIN. For banking or credit, all consumer credit, mortgages, and identification linked to the SSN expire. Medical records. Medicare and insurance systems remove the SSN as a primary ID. You are not deleting identity. You are terminating public administration and assuming full fiduciary control privately. Replacement structures required before closure. Before any notice of retirement is filed, the following trusts must already be active, funded, and documented. The first one is a private estate trust. This receives all estate income and manages assets formerly reported under the SSN. And the identifier is the 98 EIN Foreign Grantor Trust. Personal Living Trust or PMA or Family Trust handles daily living expenses, utilities, and family administration. Can be used with an 81 EIN or PMA EIN. Private Annuity or Retirement Trust replaces SSA payments through estate-funded annuity distributions. You could use an 82 EIN for this. For the Health Indemnity Trust, this covers medical and dental expenses privately, and it has a linked EIN. Special Needs or Self-Settled Spendthrift Trust protects dependents or beneficiaries with disabilities, and it also has a linked EIN. Charitable Remainder Trust, this is optional. This provides legacy income and long-term asset protection, and it also has a separate EIN. Each trust serves a specific function the SSN previously fulfilled. 3. Establishing private health and retirement funding. Before closing the SSN, 1. Fund the private annuity trust using retirement rollovers or estate capital. 2. Transfer all medical provisions to the Health Indemnity Trust. 3. Document that both trusts are self-sustaining for at least 1 year. And 4. Record internal resolutions confirming these trusts will replace the SSA and Medicare reliance. This satisfies equity's requirement that no closure create a liability or hardship. 4. Lawful procedure for retiring the SSN. Number 1. You prepare a notice of retirement and termination of Social Security account addressed to the SSA Commissioner. 2. Attach an affidavit of fiduciary capacity declaring that the estate assumes all future administration privately under the trust EIN. a final statement of account settlement showing the balance or benefits received to date. 4. Mail via the certified post and record copies in the estate ledger. And 5. Update your trust minutes with the resolution stating the SSN has been retired and replaced by the trust administration. Important. This notice is not a rejection of citizenship. It is a lawful retirement of public trust account. 5. Record keeping and continuity. Maintain a permanent file containing the original SSA card, canceled copy marked retired, copy of affidavit and notice of retirement, your trust resolutions authorizing replacement structures, ledger entries documenting final transfers and benefit conversions, and proof of funding for health and annuity trusts. Keep this file sealed within the estate archive. It is evidence of lawful succession. Number 6. Common errors that cause reattachment. Number 1. Closing the SSN before trusts are funded. This creates public liability. 2. Mixing personal transactions into trust accounts. This voids the separation. 3. Failing to keep ledgers or minutes loses record of jurisdiction. 4. Continuing to sign forms with SSN after retirement reactivates your contract. And 5. Using SPC documents as authority. This misrepresents capacity and invites challenge. Number 7. Equity perspective. The executor's transition. Closing the SSN is not rebellion. It is succession of authority. You are assuming the office that was always yours, executor in equity. Every replacement trust becomes an extension of your lawful administration. He who retires from bondage must inherit the duty of administration. Without replacement trusts, the act is emotional. With them, it is lawful. Your final template, I'm not going to read that. You'll use that as part of your retirement if you are going to fully close everything. And your reflection, freedom is administration. True independence is not achieved by discarding paperwork. It is earned through competent succession. When every trust is funded, every ledger balanced, and every duty assumed, the estate stands sovereign in equity without need of a public identifier. Freedom without records is fiction. Records with order are lawful liberty. The caveat clarification, the liquidation process and the birth certificate record. Number 1, the SF form liquidation process, when and why it applies. In Series 1, Volume 2 of Patrick Devine's Treasury Direct liquidation system teaches how to terminate public surety and redirect collateral to the private side of the estate. That process used the SF forms, the standard forms of 24, 25, 273, 274, 275, and 5510, etc., as administrative records for closure and settlement between public treasury and the private trust. The key distinctions. In the full private process, complete separation, the formal record of liquidation and transfer of jurisdiction to the private treasury is the purpose of the SF forms. This is required. The reasoning, equity demands proof that the public bond, the birth certificate estate, was settled before private assumption. The dual track process and retaining the SSA or Medicare. The purpose of the SF form is used symbolically or internally to acknowledge the estate's private status but not filed with the Treasury. This is optional. And the reasoning is the estate remains functionally linked to the public side for benefits. SF forms may be kept for private record only. In the public only with no transition, none of the SF forms is applicable and it is not used or required. Filing without private trust structure invites public confusion and possible rejection. In summary, the SF forms belong to the final liquidation of the public surety. They are mandatory only for those performing the complete private transfer, closing the SSN and all adhesion contracts. In the dual track model, taught here in Series 2, the lawful method is to retain the forms internally as acknowledgement of authority, not to submit them as live Treasury instruments. Number 2, lawful context of the SF forms. The SF forms were never secret payment instruments. They are administrative receipt acknowledging settlement between a federal agency and a surety. Patrick used them to demonstrate lawful offset, not redemption. Thus, in private administration, the executor in equity keeps copies of the estate ledger to show the estate was liquidated. The trust management company, 81 or 82, handles all new transactions going forward. The SF forms never need to be reused. They serve as historical proof, not as spendable or negotiable instruments. Number 3, what happens to the birth certificate after liquidation? Once the estate's bond has been liquidated per Series 1 of Volume 2 or reassigned to the private trust. Before liquidation, the certificate of live birth is an open registration bond held as a public surety. The lawful private action is keep one certified copy for record evidence. Give me one moment. During liquidation, the executor issues a voting trust termination notice and final liquidation affidavit. You're going to attach a copy of the certificate, never the original, as an exhibit. After liquidation, the certificate remains an archived public record. It is no longer active surety. Record its status in trust minutes as closed and assigned. The certificate itself is not destroyed. It becomes an evidence record, proof of the former estate, now governed privately. It continues to exist in the state's archive for public history, but jurisdiction over the value it once represented has been transferred to your private trust. Did we miss a page? No. No. Okay. Number 4, about authentication and adding it to the trust. Authentication, the state federal apostille process, serves only as proof of custody, confirming the document's chain of authority. It does not itself create private jurisdiction. Lawful integration happens through your declaration of trust and assignment of estate, which references the birth certificate as an exhibit. If you've already authenticated the certificate, keep it sealed in the estate record binder. You may include a copy in the trust archive with a notation. Authenticated certificate of live birth, now serving as Exhibit A to the estate trust, reclassified as evidence of estate creation. No public liability remains. Never attempt to deposit or bond the certificate with a bank. It has fulfilled its purpose once acknowledged and assigned. How this aligns with Series 1 and Series 2. Terminates the public surety system using SF forms and affidavits. In Series 2, it teaches daily fiduciary administration after liquidation. It also ends presumption of the state ownership of the estate asset in Series 1. And 2, it ensures no readhesion by structuring trust, ledgers, and settlement accounts. So, Series 1 also reclaims authority of the living executor. In Series 2, it trains the executor to function lawfully with or without SSN closure. Thus, Series 1 closes the door. Series 2 teaches you how to live on the other side. Reflection: the record remains, the jurisdiction changes. You do not erase the record of birth, you change who administers it. The public certificate stays in the archive as history. The private trust holds the living record of authority, and the SF forms confirm that the estate has been balanced in law and equity. Together they create lawful continuity, the bridge between public registration and private life. Chapter 9: the role of special needs and protection trust, safeguarding beneficiaries and maintaining lawful access to public support. Introduction: equity protects the vulnerable. True equity is measured not by freedom alone, but by how the fiduciary provides for those who cannot yet provide for themselves. Not every estate participant can move fully into the private. Some heirs or dependents rely on public benefits such as Social Security, disability, supplemental security income, or Medicare. For these situations, the lawful tool is the Special Needs Trust or Spendthrift Protection Trust. These instruments allow you to preserve eligibility for necessary public benefit, shield private estate assets from government recovery, and administer medical or personal expenses under private authority. They create lawful harmony between public necessity and private jurisdiction. Number 1, why certain individuals should not fully close public contracts. Some beneficiaries cannot safely sever all public accounts. Examples include individuals receiving SSD, SSI, or veterans' disability payments, elderly family members whose care relies on Medicare, and children or dependents with developmental or physical disabilities. Closing these accounts without protection removes lawful funding sources and may constitute breach of fiduciary duty. Equity demands provision before separation. Number 2, what is a special needs trust? A special needs trust is a trust established to hold assets for a disabled beneficiary without disqualifying that person from means-tested public benefits. Key features: the trust, not the individual, owns the assets. The trustee pays for supplemental needs, not those covered by government programs. And distributions are recorded as in-kind benefits like housing, transport, therapy, and education. Under private administration, the S&T is created as a subtrust of your main estate trust or family trust. It receives both private estate funding and, if applicable, public benefit deposits directed into its fiduciary account. Number 3, the Spendthrift Protection Clause. Whether you create a special needs trust or a standard family trust, every estate should include a spendthrift clause. No interest of any beneficiary in the principal or income of this trust shall be subject to transfer, pledge, assignment, attachment, execution, or any form of creditor or governmental claim. This clause preserves the estate's independence, even if the beneficiary receives government benefits. Those funds remain separate from trust corpus and cannot be seized. Integrating the special needs trust within your estate structure. have your estate trust layer, which holds master title to all assets and governs sub-trusts. And the identifier is the 98 EIN. The next layer is the Health Indemnity Trust, which pays all medical expenses, and it's a linked EIN. The Special Needs Trust receives SSA and SSDI benefits for the disabled beneficiary, and that's linked to the 81 or 82 EIN. The Family Trust, or PMA, provides living support, education, and housing. As a PMA EIN, you can use that EIN. Charitable Remainder Trust, which is optional. This receives remainder at death. It ensures continuity, and that you would use a separate EIN. All interactions occur under trust-to-trust contracts, never personal signatures. Number 5, fiduciary administration of public benefits. For trustees handling benefits, 1. Maintain the SSA or SSDI account open only for deposits. 2. Immediately transfer funds to the Special Needs Trust account. 3. Record each transfer in the trust ledger as public benefit conversion. 4. Pay all expenses from the trust account directly to providers. And 5. Keep annual minutes confirming lawful use and compliance with the SSA reporting if required. This preserves eligibility and separates the estate from personal liability. 6. When to use a self-settled spendthrift trust. A self-settled spendthrift trust is for individuals who manage their own affairs but wish to protect assets from claims or medical liabilities. It may receive income from business operations, annuities, or settlements. Its key protections is creditors cannot compel distributions. The government agencies cannot force disclosure beyond accounting summaries, and the trust may reimburse the grantor for living and or medical costs according to resolution. This structure suits trustees transitioning from public benefits to full private standing over time. Number 7, model resolution. And then I'm not going to go over the resolution, but your example is going to be there in the ebook. Number 8, integration with PMA and estate operations. The SNT operates under the estate's umbrella, but may hold a membership affiliation with your PMA for community care, therapy, or housing benefits. This allows you to serve multiple beneficiaries under one organizational framework while keeping each trust legally distinct. The private membership equals community provision. The trust administration equals lawful separation. All medical or housing contracts are executed in the PMA's name, funded through the SNT or family trust. Number 9, successor protection and final disposition. At the death of a beneficiary, remaining funds in the SNT transfer to the charitable remainder trust or revert to the estate trust. No repayment is due to the government unless assets were commingled with public funds. The trustee records closure with a final accounting and succession resolution in the estate minutes. Number 10, reflection. Equity demands compassion with structure. Equity serves not the strong, but the responsible. A competent executor must protect every member of the estate, even those who remain partially in the public system. By using special needs and spendthrift trusts, you honor both law and compassion. Freedom becomes sustainable, not reckless. Preparing for Executor Level Authority, Chapter 10, The Bridge to Series 3, Assuming Your Lawful Office. Introduction from Fiduciary to Executor. Every principle taught in Series 2 has one purpose: to prepare you for lawful executor level authority. The moment you understand how to operate trusts, manage ledgers, and maintain jurisdictional boundaries, you are ready to take the next step to administer the entire estate as the living executor in equity. In Series 1, you reclaimed the estate. In Series 2, you learned to function privately. And in Series 3, you will govern. Number 1, when to file Form 56 and accept the office. Form 56, Notice of Fiduciary Relationship, is the formal declaration that you accept the office of fiduciary, executor, trustee, or administrator for the estate identified by your 98 EIN or estate record. File only when all of these are true. Number 1, your estate trust is declared and funded. 2, your private settlement and health trust are operational. 3, you can account for every asset and liability in the estate ledger. And 4, you are ready to act in honor for settlement, not confrontation. Once filed, the Form 56 places you under the lawful duty to discharge and settle all remaining obligations of the estate, not to escape them, but to complete them. Number 2, preparing your executor's record. Before assuming the office, complete the pre-executor record binder containing the declaration of trust and estate ledger to date, copies of all notices of rescission and closures, banking resolutions and settlement account records, and annual minutes for each trust, private health and retirement trust fund proof, any treasury liquidation or SF form documentation from Series 1, Volumes 2 and 3. This binder becomes your executor's instrument box. It demonstrates that administration has been handled with competence, a precondition for equity jurisdiction. 3. Executor's duties under equity. As executor in equity, you must inventory assets and settle obligations through private presentment. Maintain transparent records without recontracting with the public. Issue lawful tender. That's coming in Series 3 and Volume 5. And oversee successor trustees and beneficiaries through minutes and ledgers. You no longer operate within a trust, you govern the system of trust as a living office. He who holds record and honor holds equity. Your pre-executor checklist. So you want to make sure that all of these are checked off before you move into the whole process. You're going to finish this series, and then we're going to go into Series 3 of the Patrick Devine starting February 26th, and you'll be able to make sure that you have all of these checked. When all boxes are checked, you are ready to proceed into Series 3, Executor in Equity. Transition to Series 3. In the next series, you will learn how to file Form 56 properly and record acceptance of the office, how to conduct lawful discharge and tender using fiduciary instruments, how to bond the estate through SF forms and trust assurances, and how to navigate equity courts without entering legal jurisdiction. You will move from administrator to executor, from function to governance. Chapter 11, you have all your templates. Below is the complete list of working templates for Volume 8 to be provided in the accompanying toolkit appendix. Each template should be completed under trust seal and stored in the estate binder with correspondence resolutions. And your conclusion, functioning and freedom. Equity rewards structure, not sentiment. Private life is not withdrawal from the world, it is mastery of administration. The living executor stands free, not because of belief or rebellion, but because of records, order, and honor. You have now learned how to identify adhesion contracts and close them lawfully. Replace every public function with a trust instrument. Receive benefits and income without re entering jurisdiction. Provide for health, retirement, and special needs in equity. And prepare to govern as executor in equity with confidence and clarity. Freedom without records is fiction. Administration in honor is true liberty. From here, your path continues into Series 3 Executor in Equity, where you will learn the full art of settlement, tender, and bonded administration of your estate. And then we get into the templates, which we're not going to go into. That's for our PMA group. We thank you for joining our live. And then the recording will also stay on YouTube, so that way you can go through this and really learn how to move into the private. We do have our foundations and literacy series starting February 17th. That will be live on YouTube. But if you do wish to partake in the actual class, do send us an email to classes at privatepathhrsolutions.com, so that way we can include you in our recordings, and that will be 7 weeks every Tuesday at 5 p.m. Pacific Standard Time. Also, make sure to like, share, and subscribe to our channel. We thank you for joining us tonight. Have a good night.